Imagine waking up to find your entire investment portfolio has vanished overnight. Sounds extreme. It's happening now, and many investors are blissfully unaware of the urgent warning signs of stress triggered by algorithmic trading powered by artificial intelligence. This isn't just tech jargon, it's a looming threat that could impact you sooner than you think. You might believe that sticking to traditional methods keeps you safe, but the reality is that these algorithms are manipulating the market in ways that could catch you off guard. Picture this: you're sipping your morning coffee, scrolling through stocks, when suddenly a sharp drop grabs your attention. You might assume it's just market volatility, but what if it's an unseen, AI-driven force at play? As you investigate, you notice unusual spikes in trading volume that don't correlate with any news. This is where the hidden dangers of algorithmic trading surface. These algorithms operate at lightning speed, reacting to data that remains invisible to most investors. You might think you are insulated from risk, but that's the trap. The real peril lies in how these algorithms interact, creating a domino effect. A minor shift can trigger a massive sell-off, leaving you exposed. Imagine a party where panic erupts over a rumor. You look around, and the atmosphere shifts dramatically. Now, apply that to the stock market. One algorithm catches a whisper of bad news, and suddenly your investments are in freefall. Why is anyone talking about this? Most investors are too entrenched in their routines, viewing the market as predictable and blind to the hidden forces at play. Some investors unknowingly fuel this chaotic system by chasing trends without understanding the underlying risks, only to be blindsided when algorithms react. Recognizing these investment strategy warning signs early is your lifeline. Are you paying attention? Are you aware of subtle market shifts? The path forward isn't about shunning technology, it's about grasping its impact on your investments. Be vigilant. Learn to spot the signs that something is off, and don't let algorithms dictate your financial future. Investing isn't just about numbers, it's about awareness. Stay curious, stay alert, and remember the game is changing. And remember the stay terrors Mrs. Lur sayer changes and then yes. Are you ready to adapt? Have you ever thought about how a simple algorithm could transform your investing experience? Picture waking up to find your portfolio has turned into a high-stakes game, all managed by artificial intelligence. This isn't just a future possibility, it's happening right now. Many investors are diving into algorithmic trading without fully grasping the hidden risks that could jeopardize their financial security. What if I told you there are dangers lurking beneath the surface that could wipe out your hard-earned money? You might feel ahead of the curve using AI to predict market trends, but here's the catch: these algorithms are constantly learning and evolving, often in ways we can't fully understand. Are you prepared for the potential fallout? Imagine being at a dinner party where everyone is excitedly sharing their latest trading wins. You want to join in, so you decide to automate your trades. It seems like a smart move, right? But what if that very automation is leading you toward an unseen cliff? These algorithms operate based on patterns, which can actually increase market volatility. When everyone adopts the same strategies, it creates a domino effect. Your friends might be celebrating their gains today, but tomorrow could bring a market crash that leaves you wondering how it all went wrong. Let's also consider the emotional side of investing. You might believe that letting a machine take control will relieve you of decision-making stress. In reality, you're handing over your financial future to a black box that doesn't care about you. When a sudden drop occurs, how will you react? If an AI can execute quick, calculated trades, what happens when it encounters an unprecedented event? Remember the flash crash of 2010. In just minutes, the market plummeted, leaving many investors scrambling. How confident are you that today's algorithms won't trigger a similar disaster? As tensions rise, it's vital to recognize the signs of algorithmic trading going awry. You might notice unusual pattern stocks you've never heard of suddenly soaring or crashing. It's like a game of poker with ever-changing rules, and you could be left holding a losing hand. But it's not all doom and gloom. You can take steps to regain control. Start by diversifying your investments so you are not putting all your eggs in a basket you don't fully understand. Learn to read the signals and trust your instincts. Before you jump into any automated system, ask yourself, what's the true cost of this convenience? Are you willing to risk your future for the sake of efficiency? Ultimately, the key takeaway is to stay informed. ways